In this video, I want to discuss what happens if you walk into a bank with your tax returns and you're not qualified. At that point, a lot of people might think there is no other option available for me to get a loan, and that's just not true, because when you walk into a bank, the bank will offer you a tax return loan, meaning that you'll bring in your tax returns, your W-2s, whatever you have, and they will look at it. And if they determine there's enough income then to qualify you for your loan, then phenomenal, you can get a loan. But if there isn't, they may say, well, sorry, we don't see enough income here and you just don't qualify. And at that point, you might think that, oh, geez, I just can't purchase a property at this time. And that's not true, all right? So my name is Zevi. I'm an owner of a mortgage business in Los Angeles called Brook, Inc. We're a wholesale mortgage company. And I want to talk to you about other options that are available to you to purchase property outside of just a tax return deal. So with that, let's get started. When you walk into the bank, you're actually looking at an agency loan, and that agency loan is called a qualified mortgage loan, a QM loan. And basically what it is using your tax returns to qualify based on the amount of income that you filed, okay? And you could use that to qualify for a loan. However, a lot of my clients are self-employed. And although they make a lot more money than what they actually file, because when you're self-employed, you have a top line of sales, then you have expenses, and then you have your ordinary income, which is what's left over. But a lot of times, self-employed individuals suck up a lot of their income and their expenses. They do that so they don't pay a lot of taxes, but it doesn't necessarily mean that that's exactly what they earned. If you're in that position of being, hey, I'm self-employed and I don't show a lot of income on my tax returns, you could still get a loan. We would just have to document your income in other ways. And another way to document is something called alternative documentation. And alternative documentation simply means that you're not using the tax returns to qualify. You're using things such as your bank statements to qualify. And we could easily do that for you. You would actually document 12 or 24 months worth of bank statements. And in a lot of cases, you would use 50% of the deposits as income simply because there's expenses. And you could potentially use up to 50% of your deposits, assuming that they're traceable, meaning that they're not just random transfers. But we could talk more about that, and if that might be you, then I'd love to get to know you. My number is 818-697-8220. And if you're that individual who just doesn't show a whole lot of income on your tax returns, you're self-employed, you have a lot more deposits coming through your bank, then let's take a look at that, all right? If you've enjoyed this video and it's relatable to you, then please hit the like button so other people like yourself who might be looking for this information can find it on the web. If you like this video in general, you want to see more videos like this in the future, then please feel free to subscribe to my channel. Otherwise, if you have a question about anything we covered, just drop it in the comments below. I'll be happy to go through it with you. I appreciate you being here. Appreciate you watching this. I'll catch you again on the next video. Take care.